Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for June 16th, 2013. I hope everybody had an awesome Father's Day. I know I did, and I'd love to thank my kids and wonderful wife for giving me such a great day. Before we get going, I'd like to remind you that any information contained in the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and therefore we are not giving specific financial advice or making specific recommendations. Any trades and or results covered in this presentation may or may not be live trades. In the event they are computer simulated, we do the best we possibly can to make sure they're accurately represented. Also, the risk of loss in trading options can be significant, so please be aware of all your risks prior to placing any trades. If you're watching this on YouTube, please visit our trading blog. We have lots of great information over there, www.lockinyoursuccess.com. And make sure you check out the ROCK, M3, and Bearish Butterfly video series, as well as our one-on-one and group mentoring sessions. I'd also like to note that below in the description, there should be 2 links to the group mentoring sessions. If you tried to watch those last week, the link may have been cut off. I have 2 fresh brand new links that give you great examples of our group mentoring sessions, so go ahead and check those out. Okay, let's take a look at the markets. Things pretty much went as expected last week. We were expecting sideways movement in a wide range of chop, and that's pretty much what we got. If we take a look at the SPX, we got a decent size up move, and it just completely retraced and retraced back again. So if we look at our shorter term charts, we are starting to develop a coiling or a tightening of our range very slightly. This is indicative of traders really not knowing where the market's going. You see everybody taking their positions at the support and resistance levels. We're trading very technically correct in our short-term charts. Again, just further indications that they don't know where it's going. As far as what I think that possibly Wednesday might kick us out in one direction or the other. I think if we're going to break significantly in any direction, it's going to be up. However, before we do so, it's certainly what I would consider normal to come down and retest the 1600 level also. So, I would say before Wednesday, we're probably going to continue in our wide range of chop. If we're near a support or resistance point on Wednesday with the Fed meeting, depending on the news, if it happens to jump us out of our up over 1650 or under 1600, that'll give us a better idea of our longer term direction. And I think even if we break down, we still have reasonable support all in this 1575 level. I would still consider our longer term charts bullish. So in short, for this week, we're expecting for early to midweek continuing sideways wide chop. And if we don't break out, I would expect the chop just to continue. If we do happen to break out due to news, or put it this way, a news event is going to break us out one way or the other at some point. And when that happens, we'll be able to tell directional. But for right now, we're just looking at chop. If we take a look at the index, we have the same thing. We just had a little bit more up and down movement. If we look at our shorter term charts, you can see we're testing our resistance level pretty regularly at the same level. We didn't even get there last week, and we have a couple support touches as well. Same story here, wide range of chop unless news breaks us out one way or the other. I think the downside will be limited, and the upside has the possibility to have a fairly significant large move. If we look at the Dow, again, this is our shorter term charts. We have the same story here. We had sideways last week. Same story going forward. Hold the range until we get a news event. And if we come all the way back to the Russell, this has been acting very technically predictable. We've been having our, bouncing our resistance levels pretty regularly. We have a rising support level, which to me is bullish. However, like I said, the traders, short-term traders, they don't really know what's going on. They're just taking positions. They're running it to a resistance level. They're taking their position, getting ready for a breakout. If that fails, they're selling it off fairly hard until they get to a support level. They're taking their position, running it up to our resistance level. When it fails, they're running it back down. So it's going to take a news event at the right time to push this one way or the other. And until then, we're expecting continued sideways movement. Let's take a look at our positions. And I apologize for going over these so quickly the last few months. I'm kind of tracking more positions than I should be. We got a couple peak condors going on. We have M3 trades. We got Bearish Butterfly trades. We got ROCK trades. That's a lot of positions to cover in one video, so especially if there's a lot of movements. So what I'm doing the best I can to cover them fairly quickly so we don't have a 2-hour long video, while at the same time giving you enough information to see what's going on. So anyway, here is our V condor for June. And because of the continued sideways movement, there has been absolutely no changes in this. If we take this and back it out, you can see we got our shorts here at 920, we got our shorts up here at 1020, and we've just been in this range here. I'm just waiting for this to expire. Again, this was a tough month for this trade because we started out with such an aggressive move after we put it on there, and we had to chase the market quite a bit. But as I was saying, I was like 90% confident this would work out at some sort of a profit. Not a great profit. We're probably going to expire it out at what, around $1,800, which is a little more than half of what normal is. But concerning the month, I am perfectly happy with that. As far as the V condor for July, I did make a minor move here, but basically this was put on after the large move, and we've just been sideways since this thing's been on, never really drawn down. This is what our current position looks like here. All I did for a adjustment, because the market was sitting in the center here and not really going anywhere, I want to start to raise my expiration graph and kick up theta in this area until we break out one way or the other. So what I did is I went in and I rolled our long straddle even further out. If we take a look here at our T-log, you can see the move was done on Monday. And all I did is I took my 1,000 calls up to 1,020, and I took my 970 puts down to 950. And again, here's our position. We're currently up about $1,500. Expiration line has been risen to 3,000, which would be an average profit if the market tends to sit here. But in reality, if it sits here for too long, I'm going to probably widen it out some more and even be able to kick us up with a little bit more profit. And as usual, if we drift to the upside, which is what I would tend to expect longer term, who knows, we may even get up here and take some sort of a bonus this month. I really don't know that we're going that high this month. I think that our aggressive up moves are about done until we get a very long sideways consolidation or we do get some sort of a rebound. Okay, let's take a look at our June Bearish Butterfly. This is how we're currently positioned on the June Bearish Butterfly. We have 10 butterflies at 970, we have 10 at 990, and we have 4 up here at 1010. During the week on Monday, we got a significant move up. I ended up buying 4 of these 1010 call butterflies, and they're butterflies that I had sold off earlier. So I initially had 10. The week before last, I sold them down to 6. Last week, I bought them back because the market bounced again. So what's happening is this position is just a little bit too narrow for the wide range of chop we're having, being this close to expiration, and we're trying to hold a tight delta, so we're getting kicked up and kicked down in the position. So the position is, I'm buying these, I'm selling them off, buying them, selling them off to control my delta on the upside, just in case we break forward. It does cost us some money, but that's what we need to do closer to expiration to protect ourselves a little bit. If you want to play the game where we try to hold our delta and hold our profits. So anyway, I bought 4 of these 1010s, and I had 10 of them on Wednesday. I ended up selling 6 of them off, and now I only have 4 of them. So I bought 4 and then sold 6, and we're currently sitting in this position here. And I have 4 more left at the 1010 level. Our delta is about minus 39, which is about perfect. If you remember, we were up at maximum loss here. We even exceeded it for a very short time on that blow-off date to the upside. And I was discussing this the whole time. Does this look like a good trade? And it would probably come back. And here we go. We're actually over our low profit target. Had we pulled this off last week, we certainly could have done that for low profit target. But as we're sitting now, we're up 68.58. And here is what the position looks like. So it's looking nice right now coming into expiration. As far as our July Bearish Butterfly, this has had absolutely no adjustments. Earlier in the trade, when you have a lot of time to expiration, these are very forgiving of price movement, and we can sit in a very wide range of chop and pretty much sit back and sip lemonade on our porch and not worry about it a whole lot, which is the nice part about this trade. And the trade's currently sitting at 10,990 butterflies, only 1/3 scaled in. We're up almost 10% of our planned capital, which is about 30% of our invested capital. Or I bet if I calculate that, it's probably even closer to 40% of our invested capital. And here's what the position looks like. No issues here whatsoever. Things are looking good with no adjustments this week. Next is our June M3. Now the M3 trades coming into expiration tend to be a little bit narrow because it's not like we have butterflies out in 3 different directions. We usually have them in one spot. And what I've been doing all week with this trade is just kind of widening it out. So if we come back to Monday, or actually let's go back to last Friday. This is what we were looking at here. So if we take a look at our analyzed graph, we have a position that looks like this. We have our long calls on. We have 5 shorts here, 5 here, and 5 here, and 5 here at 990. So we would have had 5 at 970, 5 at 990, 5 at 960, and 5 at 950. And as we come into expiration, this trade holds a fairly flat delta. And in order to do that, sometimes we do get kicked around a little bit. If we go to Monday, we did have a fairly significant up move, and I ended up selling 5 970, 980 put spreads, which would move this leg over to here. So if we move up to the end of the day Monday and take a look at our analyzed graph, it looks very similar, except it's just slightly wider up here, holding our delta flat. And this tends to collapse really quickly coming into expiration, so I kind of have to watch this when it hits the edge of the tent. This position was fine on Tuesday. However, on Wednesday we started to get a pullback. One of the things that we can do when I know the market has a wide range of chop, all I want to do is I want to try and widen out my tent area, because we're coming into expiration, and the reality is if I go into to expiration with this, I want to be into the tent. So I just start to widen this out to match the chop of the market. As the market started coming back, I needed some negative delta. So to do that, I take my 1,000 puts I have here, and I roll them up to 1010, and that'll give me the negative delta I'm looking for. So if we go to the 11th, or actually to the 12th, you see we got a significant down move, and I took these 1,000s out to 1010. It increased my negative delta. It made a deeper hole here, but I wasn't so concerned about the upside at this point because the market was going down so aggressively. You can see I'm basically in the center of my condor. You'll see when we come into Thursday, we're buying back 10 of these shorts in the middle and actually just moving stuff around a little bit. Going to get rid of the call so that we widen our tent here coming into expiration. So when we come into Thursday, you can see where we are now. You can see I bought back 5 of these. I sold 5 of these 920s, and I bought back 5 of my, I think, 980s I had, and I sold some 990, 1000 put spreads to put us in a position where we have the delta limits that we normally would like to see for an M3. However, I also sold off the call, because if I cut down my condor or butterfly size without cutting my call, I would have been way too positive delta. Gives me a position that looks like this. So now I have a nice wide target here coming into expiration, and I really don't have any risk on the upside at this point. Okay. Now Friday, as you know, the market started going up in the morning, and if I wanted to control my delta, what I would have had to do probably is to roll these shorts forward. I could have ignored it and waited for it to come back, which would have been happened to be the better choice that particular day. But we're running into expiration. I'm near an edge here. I had to be out Monday morning for a little while because I had things I had to do. So I wanted to flatten this out a little bit. I ended up selling some verticals, some 990 1000s to flatten myself out a little bit. And then when the market reversed, I rolled my longs out to get my delta corrected to the downside when the market reversed on us. So if we come into the morning here, let's see what time this was. At let's go to 10:30. You can see we rolled these 990s up to 1000. And like I said, I did this earlier when the market was up in here somewhere because I wanted to protect myself up here. And then the market started coming down fairly aggressively. So what I ended up doing is rolling these 1000s up to 1020 to deal with the downside move. And towards the end of the day, if we come in here, this is what the position looks like. We're still up about $3,500, $3,600, and I rolled these out. I took on some upside risk to deal with the fact the market was going down, and that also increased my theta levels quite a bit coming into expiration week. So from here, realistically, I'm just looking to close this out early in the week. If they give me the price that I want, which is going to give me a little less than a 10% profit, probably a 9 or an 8% profit in this. I'd like to get like $4,100, $4,200 out of it. If I can do that Monday or Tuesday morning, then it's going to be gone. If I have to wait, I will continue on. So a lot of these moves I made weren't completely necessary. I'm just kind of showing you, if we were a little skittish on our profits and we wanted to start reducing our size down and widening our tent out into expiration and playing it safe while staying in and going for more, this is one way to do it. So this is where we sit, and let's see what else we got on here. I went into our July M3. What I ended up doing here is I ended up entering 10 put condors, and they were 990, 950, 960, 1000s, and I added one 890 Russell call, brought our delta pretty much to where we wanted it. And one of the things you'll notice right off is usually I'm simulating putting on a 50-point wing butterfly with 10-point verticals in here. I only have 40-point wings on both sides. This is basically a 40-point wing split strike butterfly, or you can call it a 40-point wing condor. The reason I did that is because, as I've been telling you, this account, well, it only had 30,000 in it, but now it's up to almost 40,000, with these trades here. And anyway, it's got like 40,000. If I'm trying to run two $50,000 trades with a 40,000 account, can it be done? Yeah, it can be done. And you can overlap them. One way to do it is you cut down your front month, which I did. And I wanted to get into my July, so I cut my capital down in my June month. And then when I put this one on, instead of going 50 points here, I went only 40 points. Trade's still pretty much going to react the same. You take a slight theta hit, but nothing too serious. And we enter this position with less than $20,000 capital. So now I have my June trade. If we look at the capital in that one, all the way down to about $14,000 in capital. Still with the ability to make our 10%, although I'm probably going to pull it at 8 or 9. Still a good month. And I have my July trade on with only about 18 or 19,000 in risk capital on. So I'm running my two overlapping M3 trades, and I'm still well under my planned capital for one. So this is some of the things we may be going on to in the future, is taking your $50,000 M3 trade, making it so you can trade it with $30,000 or maybe less, still keeping the same $5,000 profit target. So now technically, instead of making 10%, in reality, you're kind of kicking yourself up to about 15% on this. So this should be interesting going forward. So it's just like I said, just something I'm showing you, and hopefully you can learn from that. And last but not least is our June ROCK trade. Our June ROCK trade this month has been doing pretty well. If you take a look at this, if you remember right, we started with 990 and 1030 butterflies. We entered at the intraday at the top of a market, and we had a hard pull down the same day, at least from the highs. It wasn't that bad of a day overall, but it had a very wide range where we had a large up move, put the trade on, then we had to have a large down move. We kicked right back into ROCK with a 1/2 rollback and rolled our 990s down to 970. And with the sideways chop, we really haven't had to do a whole lot. As a matter of fact, this week we did absolutely nothing. And this is how the trade sits. Again, if we start creeping to the upside, we're going to start putting these 10-10 butterflies in here and raising this expiration graph. But as of right now, there really hasn't been a need to do that. Trade is currently, as of Friday, up about almost $7,500. I think at close it was posting a little bit higher than this, but we'll call it about 15% profit. We're going for 20 if we can get a few $1,000s out of it. I may end up closing this early because I have some personal stuff going on towards the end of the week and I don't want to watch too many trades. We'll see how the market goes. But realistically, if I can get this up over $9,000, which would take probably a slight down move or a couple stable days next week, I might take it and not risk going through the Fed meeting on Wednesday when I don't really want to watch the market this week. So this is how we stand. Here's our position once again. We're looking really nice. A few days of movement anywhere in the 965 to 985 area, and we'll be looking nice. If we shoot up, like I wouldn't be surprised if we do. We may end up taking a small profit, but very, very low risk of actually taking a loss here. If it really shoots up, it should be easy closing this at 10%, pretty much no matter what happens in the market, unless it's a complete disaster on Monday. All right, those are our positions. We're expecting continued sideways movement for the next 3 days, and if we have and kind of waiting for a major news event to knock us out of our channel here to see if the market actually picks a longer term direction. So have a great week, everybody, and I'll keep you updated with any changes. Thank you and good night.